Hello. Today is Saturday, September 13th. I'm just looking back over the charts and trying to tell myself what I would have done. Just paper trading if I would have been there, market open. So I marked out all the opens, and then marked out all the highs and lows of each. So marked out all the highs, lows. So I probably would have been awake for Asian lows. So they already got swept out by London. Yeah, so that wouldn't have been relevant. And then I probably would have been, 100% would have been on to see these highs get taken out. I would have definitely marked out this fair value gap right here. As you can see, it got hit pre-market. Here I got a reaction off of it. So probably wouldn't have been too relevant. But there was one right here. Probably wouldn't have think we would go this low for this fair value gap. And then we have previous day highs right here. I would have marked out. So right off the rip, we take out Asian highs almost immediately. Then we get a retracement down. And then I don't really know, there wasn't really a good point to enter. I mean, we get hit Asian highs and then just candle down, but there's no fair value gap, liquidity sweep, so it just goes back up and hits previous day highs. So I probably wouldn't have gone in, taken this short, because we hit it, it comes down, Asian highs comes down, takes out 5-minute liquidity, but we try to get off of 1 hour liquidity, 4 hour, so I probably wouldn't have taken that trade. But previous day highs, hit it, make a low here, make another low here. And this is really confusing to me because we break structure here, and then we don't get a order block or a fair value gap or anything like that. And we really don't even get into equilibrium either. This is really late in the trade, we would have gotten in. We would have had to wait for the entire down move to get back in. So I might have gotten in just off of this 5-minute fair value gap after the break of structure. The inverse fair value gap, obviously. And then after that inverse fair value gap, I probably would have waited for a 1-minute break of structure. which would have been this candle, and then I just shorted it off of that, bought our stop just above that inverse fair value gap, and bring this to 1 because first take profit's 1, and then we can really just target these lows, these lows, these lows, these lows, these lows, all the way down to Asian lows. It's really what we could have targeted. We could have even targeted London lows, but that didn't. It'll eventually get hit, but did not get hit. We hit London lows, and look what we see back up, but that's a 3.3 to 1, so that would have been a good trade to take. And it would have got hit pretty fast. So good. 20-minute trade almost, so that would have been a good trade. That was a good paper trade. On the NASDAQ, we paper traded this yesterday, I'm pretty sure. We already showed that one, so yeah, those are the trades I would have taken. That was ES was the trade I would have taken. I was home for this trade. I obviously didn't see it. I think I was sleeping. Because it was, this happened at like 3 o'clock, yeah. So I was definitely home for that trade, but I did not execute. This trade, I don't think I was home for, but either of them would have been good. This trade almost got stopped out, as we talked about in the video yesterday, but yeah, just paper trade today because markets closed until Sunday at 5 p.m. So just get some practice in.